Hey tech fans, it's time to dive into today's headline story that's shaking up the cybersecurity world. CrowdStrike is currently front and center in a whirlwind of lawsuits, stock dips, and reputational havoc. Let's break down exactly what's going on with this NASDAQ-listed company. The Falcon falter. First, let's set the scene. CrowdStrike, a major player in the world of cybersecurity, found itself in hot water following a disastrous software update in July. The company pushed an automatic update for its flagship Falcon sensor, a tool relied upon by countless organizations to keep their systems secure. But this update turned out to be more of a trick than a treat. The update contained a bug that triggered a colossal overnight outage, affecting a staggering 8.5 million Windows computers. Businesses from banks to broadcasters found their operations crippled, with many systems crashing and showcasing the dreaded blue screen of death. Ouch. Legal storm. Now this isn't just your standard IT hiccup. The fallout from this mishap is epic. Investors who suffered massive losses aren't taking this lying down. Multiple law firms have jumped in to represent these aggrieved shareholders in class action lawsuits. Hagens Berman and Levi and Korsinski are two of the heavy hitters urging investors to step forward and recount their losses. Both firms are digging into allegations that CrowdStrike falsely assured stakeholders about its Falcon platform's resiliency, yet lacked proper testing procedures, creating a breeding ground for such a massive failure. The lawsuits allege that due to the botched update, CrowdStrike misrepresented its product's safety and efficiency. As a result, many are facing big-time financial hits. We're talking losses that have triggered serious legal action and driven down the stock price by a dramatic 24%, shedding $84.24 per share. If that wasn't enough, Delta Airlines is suing over damages caused by the update that led to over 6,000 flight cancellations. Oof, talk about a nosedive. Stock speculation. With shares plummeting 44% in July alone, it's been a rough ride for CrowdStrike investors. The company's valuation took a massive hit, with market cap losses inching close to a brutal $30 billion. Now, despite this painful episode, is it all doom and gloom? Maybe not. Some analysts suggest this deep dip might be a buy-the-dip opportunity, if you dare. Before the nosedive, CrowdStrike was sporting a steep PE ratio of 437, indicative of investor frenzy bidding it up ahead of true earnings growth. Even battered and bruised, CrowdStrike remains a major player in the lucrative AI and cybersecurity market, with annual recurring revenue rising 33% to smash past $3.65 billion. There's still a huge market potential, which means that while some may be spooked, others are eyeing a long-term recovery similar to Equifax after its data breach disaster. What's next? So, what's on the horizon for CrowdStrike? Tons of soul-searching, lawsuits, and possibly a long haul to regain its standing. Exit analyst hopefuls left wondering how quickly and effectively the company can patch up its reputation and resume normal business. With layers of lawsuits and regulatory scrutiny on deck, it's about to be a fascinating watch. Will investors stick it out for a potentially longer turnaround, or will CrowdStrike's faults fester, fueling further ebb and skepticism? Only time and a keen legal team will tell. That's the big scoop for today. Stay tuned as we continue to follow this evolving story. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.